Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. Last week, we saw the S&P and the Nasdaq finish at fresh record highs following cooler labour market data, which heightened expectations that the Fed will deliver its first rate cut in September. Friday's non-farm payrolls showed the economy added 206,000 jobs in June, which was in line with expectations. However, numbers for April and May were revised lower by a combined 111,000 jobs, and providing further evidence of cooling in the labour market, we did see the unemployment rate tick up from 4% to 4.1%. This week, the key events in the US are CPI and PPI data for June, as well as Fed Chair Powell's semi-annual testimony on monetary policy to the Senate Banking Committee. Also, this week, we have the Quarter 2 2024 earnings season kicking off. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as we start the new week. This first chart is the Nasdaq 100 on the monthly time frame. And the reason I've brought this chart in this week is I wanted to show you how the rally which we've seen here over the past 8 or 9 months has really made it this very painful bear market, which we saw in 2022, seem quite insignificant. What you can also see here is we're starting to see some acceleration to the upside. It's becoming more parabolic. And that to me suggests we really don't want to be fighting this, chasing this trend, and nor do we want to be fighting it. So if you were to tell me in 2 to 3 months that the Nasdaq had got close to 22,000, I wouldn't at all be surprised. Now, where do we need to see the Nasdaq retreat below to give us some signs of, I guess, that potentially a top of some description is in place? Well, I would need to see the Nasdaq get back below this 20,000 area, back in this trend channel, which is held in place for many, many months, really since January 2023. Right down the bottom here, you have the 200-day moving average, which comes in around 17,000 and being reinforced by the uptrend support from that same trend channel. Seems a very long, long way away, and I'm certainly not calling for a pullback to that area, but back into this area probably still is a reasonable expectation after we've completed this acceleration to the upside. When I look at the S&P 500, I can see similar in terms of the loss of momentum candles, which we saw over the past 2 weeks, were just blown out of the water, completely erased. Now, when you see these loss of momentum type candles, you do need to see some acceleration to the downside to provide further confirmation that we have indeed topped out. Now, what you can see with this green candle, acceleration to the top side, as well as acceleration from the top of this trend channel. So once again, you've got some very strong bullish signs in place here. And if you were to tell me the S&P 500 had been up to 5750 in the coming months, I really wouldn't be surprised seeing this type of blow-off type price action. In terms of where the S&P would need to retreat back below to potentially suggest that we had put in place a high, I need to see it trade back below probably 54.50, which is the lows we've seen over the past 2 to 3 weeks, potentially below 54.20. And in that case, I'd be looking for a pullback towards 5,200. Thanks for listening. Have a great week ahead.